Welcome to Workforce Wednesday. I'm Sarah Rowlett with the Kentucky Career Center. For the next upcoming series, we have with us Mr. Robert Byers with the Woodforest National Bank. We're going to be discussing the bank accounts, the differences between bank accounts, so on and so forth. For the beginning series this week, we're going to talk about financial products, services, and providers. Thank you so much for joining us, Robert.
To talking about bank accounts and really hoping educating people about what they need to do and what they don't need to do as it relates to bank accounts. This this first section is going to help you understand what type of financial institution or what type of bank credit union is going to be a best fit for your needs and the things that you want to accomplish as it relates to your money. So we'll talk about a lot of different financial institutions and what they offer and things of that nature. So first, let's break it down into all the different type of financial institutions. So I think the most common is banks. There's banks of all sizes. There's over 5,000 banks in America. We pretty much, all banks have pretty much the same products and services. Some are a little bit more catered to maybe online banking, some more a little bit old fashioned, but pretty much for the most part, all banks are around the same and have the same products. Credit unions. Credit unions are a little bit different. You have to become a member, and we'll talk about that, I think, on the next slide. So, credit unions are set up as nonprofits, and then there's other organizations that accept deposits of money and that also lend money. Um, Credit unions and financial institutions or banks are probably the most popular when it comes to those because most of the organizations that do car loans or personal loans, sometimes you can't have an account with them. And we'll discuss that as we go through these slides. Next. So the differences between a bank account, or I'm sorry, a bank and a credit union. Like I said before, banks have customers, credit unions have members. And what that means is the membership, you have to fall under a certain category. So there's credit unions. I think there's a credit union for like Toyota. So if you work at a Toyota manufacturing facility, you're automatically eligible to be at that credit union. There's a teacher's credit union. So if you're a teacher or a retired teacher, you're eligible to be part of that credit union. There's a military credit union. So if you've been in the military, you're eligible for that. There's also credit unions that if you live in a certain zip code or live in a certain area of the city, that makes you a member, I guess, qualified member for that credit union. Whereas with banks, there's really no qualification. You can literally just walk into a bank or go online and decide where you want to bank at. So I think that's a big difference that a lot of people don't realize between the banks and the credit unions. And also, like I said earlier, credit unions are considered nonprofit organizations. So how they operate their business and how they kind of work with their customers is a little bit different than a traditional bank because traditional banks are obviously trying to make money. Next slide. So both traditional banks and credit unions are insured. So traditional banks are insured by the FDIC, the Federal Deposit of Insurance Corporation. And each person that has up to $250,000 in their bank account, that is insured. So what that means, let's say there was a world crisis or a country crisis and something happened to the bank or something happened to that financial institution that you bank with, the FDIC will still insure your money so that your money won't get involved in any type of garnishment or any wages taken away from you personally, even if that bank is at some type of fault. So the FDIC pretty much protects your money for you from anything happening with the bank. And for the credit union, it's the National Credit Union Administration. It's very similar to the FDIC. If something happens to a credit union, if they lose money or just anything, the NCUA is going to protect your money for you for the credit union. Okay, accessing services. This is very important because we all are different stages in our life and we all have different priorities that we want from a bank that's going to help us really have a better banking experience. So not everybody is really concerned about where the actual location is. and not everybody's really concerned about the mobile banking. It depends on who it is. I know my mom, she cares more about who the branch manager is at the bank as opposed to downloading the web mobile banking. Whereas me, I like to do the combination of both. I like to look online at my accounts, but then I also like to know who works in the branches. So um, the accessing your services is a combination of all the things listed here on this page. And I think the most popular would be the ones I've mentioned, either going directly into a branch or directly into a bank and requesting services and or the mobile banking. Now, obviously, with the pandemic, um, a lot of banks have closed their lobbies, so you can't go in. So that it's kind of forced people to more so rely on the mobile banking and the internet banking access as opposed to the face-to-face. So maybe once the pandemic is kind of slowed down and the vaccinations are you know distributed, everybody can somewhat go back to normal and go back to the banks. So the main products for both financial institutions and credit unions: deposit products. These are products like a savings account or checking account, products that you put your money in. Um, Credit products. Credit products are anything that has to do with your credit. So that could be a credit card, it could be a car loan, it could be a mortgage. Those are credit products. And then other products and services. So some other products and services could be your 401k. So if you have a 401k, and you want to transfer it over to the bank, or investments if you're saving and you have a retirement or you have an IRA for your kids. Those are other services that banks also provide to help you plan for your future. So we kind of just went through the deposit accounts. I did not mention a certificate of deposit. So certificate of deposit is when you put a lump sum of money and you put it away for a long period of time. It could be as short as 6 months, as long as 6 years. And that particular pool of money earns interest while it's sitting there. And you cannot physically withdraw from that. You would have to come in and close the certificate of deposit if you wanted to get those funds back. So, and if you close it before the term is over. So let's say you did a CD for 3 years. If you come in a year and a half later and term it out instead of waiting 3 years, there could be a penalty on that. So a lot of people use that if they have money that they're just looking to put away and they don't want to touch. Money market accounts are accounts with um, higher I guess, deposit numbers. So if you have large amounts of money, most of the time a bank or a credit union is going to suggest you put that in a money market, which also earns interest. So if you have $100,000, you just don't want it sitting in a regular checking account. You'll want it in a money market account because it could potentially get you a lot more money. Credit products, like we said before, credit cards, lines of credit. A line of credit is something that usually has collateral with it. Not all the time, but sometimes. So I think one of the most popular lines of credit that people have is on their house. So they will get a loan from their house based on the equity, which is how much money they have put into their house based on what it's worth. And they can use that line of credit, that equity in the house, to borrow money and pay it back as needed. Installment loans are considered structured loans. So a car loan, when you go get a car loan, it's going to be a 5-year term. And once you pay it off in 5 years, you're done with it. That's installment loan. So that's any type of loan where you have a certain term where you pay it off. And then once you pay it off, you're done. And then mortgages, I think, everybody knows what a mortgage is. That is a loan based on a property or a house. And so some of the other products and services that credit unions or banks may include is check cashing, money orders, prepaid cards, debit cards, cashier's checks, automated teller machines, ATM machines, online mobile banking, and person-to-person payments and remittance transfers. So I think all of these are pretty well known for the most part. Remittance transfers. We'll talk about that actually in another section that we'll be doing later on today. So I'll wait to that and discuss that further. So other financial service providers. So let's first not be confused that the list here is not necessarily considered financial institutions, but they are financial service providers, which means they can offer certain products or services that a bank or a credit union does, but they won't offer all of the products and services that a bank or credit union does. So convenience stores or post offices. There's a lot of convenience stores that where you can A, cash your check and they'll cash it for you, B, get a money order. But that's pretty much it that you can do at a post office or convenience store. You're not going to be able to set up a checking account at a post office or set up a checking account at a convenience store. Stores that sell prepaid cards. So a lot of those type of places you can load money in that store physically if you get a card with them. So let's say if you don't have an account at a bank and you go cash your check, and then you can go to one of those stores and put the cash on a card if you don't want to carry cash. But you that's pretty much the main service that they provide. And then check cashing stores and outlets. That's all they do all day long is just cash checks. There's no accounts attached to it, no any other products or services other than just cashing checks. Payday lenders, which I recommend not to really be involved with because they can dig you in a big hole. Most payday lenders are for people who maybe are struggling a little bit with credit. They don't have the credit that they need, so they use their direct deposit or money coming in and they borrow off of that money. Payday lender charges them a large interest rate when they're borrowing off of their own money. So if all possible, please stay away from payday lenders unless it's an emergency. Pawn shop. Pawn shop is very similar to the convenience stores and post offices. They can cash checks for the most part. And maybe if you have jewelry or something of value, they can use that as collateral for a loan or any type of funding. So a lot of times if you bring in something of value, you use that as collateral and then they loan you money. And then vehicle title lenders is where you're literally putting your vehicle up for a lateral for a personal loan. So you borrow $5,000, and if you don't pay that back, guess what? The lenders take your car from you. So that's another thing I don't recommend. What financial products and services do you need? So everybody is at different points in their lives, and everybody may need different services and different products as they go through life. So understanding what you need now may be different from what you need 5 years from now. And so sometimes maybe the bank that you're banking with right now is helping you right now, but then 5 years from now, if you grow or move bigger, you may need other services and products that that current bank doesn't have. So I always recommend people to have a combination of maybe more than one bank, maybe a bank and a credit union, instead of just having one relationship with just one bank. And this is, as we click through this, more of a face-to-face activity that we would do if we were in person. So the checklist, this is a very important checklist as you're trying to identify what type of financial institution or credit union is going to be the best fit for you. Your needs and access. So if you're someone who doesn't necessarily have to go to the bank every day, that you can maybe do online banking and internet banking, I don't think a bank that's 20 miles away may be okay because you won't have to go there a lot. But if there's something around convenience that you have to get there, several times a week, maybe you want to pick a bank that's close to where you live or close to your job. Um, Also, the checking accounts and the types of cards. Like I said before, most financial institutions have very similar accounts and products. There may be slight differences and slight reasons why some are free and some are not. So really understanding and asking the questions, researching the banks and credit unions, what that looks like, what their accounts look like. Savings accounts, debit cards, ATMs, all of that is very important. Like I said, most of it is very similar regardless of what bank you go to. Overdrafts and overdraft fees. That's very important because that's money that you don't want to have to spend if you're going to overdraft your account. So understanding what those services look like for the bank is going to be very important to help you make a decision on what bank is best for you. So the biggest takeaway, consider your needs and shop around for financial products and services. Don't go, kind of like if you're going car shopping, you don't want to buy the first car you sit in, do some shopping around first. So thank you guys for your attendance. Feel free to reach out to me if you have any questions. Back over to you, Sarah.
Thank you, Robert, for that information. If you all will like, comment, or share, just so we know who's participating out there, no obligation for us to contact you. We just like to know who our viewers are. Thank you so much for participating and viewing. Hope you guys have a great week and see you next week for the continuing of our bank account series.